Here we have Lesson 6-2, and Lesson 6-2 is the second part to completing a worksheet. And we're going to be completing a worksheet completed for a service business organized as a sole proprietorship. So what will we learn today? We're going to take a look at how we can analyze and explain adjustments for supplies and prepaid insurance, and then complete that adjustment column on our worksheet. So what do we take a look at? We have several terms that we have to deal with for our planning of our adjustments. If we pay cash for all of our expenses in one fiscal period that is not used until a later period, that's going to be called using a prepaid expense. So when we buy supplies, we either pay for it on account or pay cash for it, and that is going to be a prepaid expense. Okay? So reporting income when it's earned is going to be called an accrual basis of accounting. And those are two big terms that we deal with. So here's my example. If I go through and I give a golf lesson today, I go through and I record the fact that I performed that golf lesson, even if my customer is not going to pay me until 2 months from now, because we have it set up that they're going to bill them and they're going to pay me later. I have to record the fact that I gave that golf lesson today, and that is where I go through and I record that as accrual. So generally accepted accounting practices, or GAAP, requires the use of accrual-based accounting. So I'm not going to record that revenue at the time that my customer pays me. I record that revenue on the books the day that I perform that service. So reporting income when the cash is received is called cash basis accounting. And again, it's just a different way of reporting our income. So accrual versus cash basis. And again, we're going to use the generally accepted accounting practices of going through and doing accrual based. When we change accounts at the end of a fiscal period to account for things that get missed or stolen or lost, that is going to be called an adjustment. And here is my best example of an adjustment. So my youngest son loves pickles. So we go shopping at the store, and when he was younger, like a little toddler, he'd walk up and he'd grab a jar of pickles and he'd be like, Mama, pickles! And he'd walk over and hand me a jar of pickles. What happens if that jar of pickles slips out of his hand, drops, and breaks? Do I have to pay for it? Typically not. Most grocery stores are going to be understanding, and they'll go through and we'll get the mess cleaned up on aisle 7 for a jar of pickles. But here's the thing. That business has to account for the fact now that they can't sell that jar of pickles. So they have to go through and do what is called inventory, and they have to account for what is there, what is not there, and we have to do that for some things there. So when we account for things that we no longer have, that is going to be called an adjustment. So what we have to do is we have to take a look at adjusting supplies. So throughout the fiscal period, we go through when we buy supplies, we record it as a debit to our asset account, and we go through and either credit on an account, our accounts payable, or we would credit cash. So what we have here is on January 31st, at the end of the month, we have a balance of 620 supplies. We are going to go through and record an adjustment where we have our new balance of supplies. If we go through and physically count what we have, is going to be $90. So in order for me to get from 60 to my new balance of 90, I have to go through and credit my supplies here of $530. I can't have a credit without a matching debit. So I'm going to debit this new account that we're going to deal with, which is going to be called supplies expense. And the only time we use supplies expense is at the end of a fiscal period for accounting for things that are going to be used up. So this is going through and explaining that using our T accounts, but if we actually look at this on our worksheet, what we're going to do is we're going to go through and write our debit and credit amounts in here. So I'm going to debit my supplies expense for $530, and then I would go through and write my credit amount, and I'm going to credit it $530. You will notice here that we have a small letter A there. That small letter A there is going to go through to label these as the same adjustment. So we know that this is our A adjustment, and then we'd have B, and then we have C. We are not able to put in our small letters in MindTap, but just to point out what they're talking about, and you'll see that in the book as well. So our next adjustment that we're going to do is going to be called insurance. Now, insurance we don't physically do an inventory count on. What happens is we call our insurance agent and we say, okay, what is our present value of our insurance if we were to cancel our policy? And they'll give us that. We know in the books, if I look at my asset account, prepaid insurance that has a debit balance, we'll have $900. We call the insurance company. Insurance company says, hey, guess what? You have $750 worth of insurance. Well, I have to do some math. 900 minus 750 is going to go through and give us 150. That is going to be my adjustment. So you'll see that we have a letter B here because when we go through and record this on our worksheet, we're going to do exactly the same thing we did before. We're going to go through and debit our insurance expense account, and the only time we use insurance expense is at the end of the fiscal period. And then we're going to go through and credit our asset. We're going to have it going down because we need the value of our asset to go down. And then the third thing we'll do is we'll go through it and get our label on here, and you can see that that is going to be listed as the letter B. Now, right now, we are only going to have 2 adjustments, but eventually when you do a worksheet, you're going to have lots of letters, and you'll find that when we get a little bit further into our accounting land. So what do we do here for our worksheet? We have our 2 adjustments on there. Again, these white lines indicate that there is part of the worksheet that is not shown on this image, and we have to go through and provide a single line. The single line right here tells us that we do math. No different than when we go through in math class and we go through and write 1 plus 1, single line, and then you write 2. This arrow right here truly does indicate that I just did math, because it would look really weird if I did 1, 1, 2 with a plus sign, because you don't really know where we need to go through and put that number in. So we're going to go ahead and use the single line as a way to indicate that we did math. So that's what we'll do there. After we go through and do the single line, you're going to add both numbers there, and I add up 530 with 150. It's going to give me 680. And then we'll go through and add them up. And once I add them up, we're going to put double lines in between, down below. The double lines mean, hey, everything comes out and it equals. And again, it just makes the numbers stand out instead of just an individual amount on there. So that's going to be the double rule that you'll put in there. So let's take a look at this question. Explain how the concept of matching expense with revenue relates to adjustments. Well, let's think about it. We have to make sure that expenses are recorded exactly at the same time that we make the revenue. If I'm going to go through and perform a bunch of golf lessons in July, I want to make sure that my expenses with those golf lessons are recorded in the same fiscal period, because otherwise you can get into a little bit of sticky trouble. So our concept answer is it has to be recorded in the same fiscal period in order to make sure it shows this is what was needed to generate that revenue. My next question is, what are the 4 questions that need to be asked when you analyze an adjustment on a worksheet? So we know there are 4 of them. The accounting book does a very good job of listing them out. So our first question is going to be, what is the balance of the account that needs to be adjusted? I will find that on my worksheet on the trial balance. The next one is, what should that balance be? Okay, we get that by, it's going to give us that in the directions of the account. So it'll say that the value of supplies is $30, for example. Third question is going to be, what must be done to correct the account balance? Is it going to be going up or it's going to be going down? Well, I'm going to tell you right now, for supplies and prepaid insurance, all of our accounts are going to need to be credited. So then we have to go through and figure out, how is that adjustment going to be made? So those are going to be your 4 questions. So again, making sure that you understand section 6-2, highlight your chapter, do some notes, And then we'll go ahead and complete that work together and on your own. Taking a look at Work Together 6-2, we are going through and completing the adjustments for our worksheet. And again, the purpose of our adjustments of the worksheet is for you to account for things that we've used up. Now, in our very beginning of accounting, we're only going to go through and adjust 2 accounts. Our 2 asset accounts that we are adjusting are going to be our supplies and our prepaid insurance. Think about it. Throughout the fiscal period, we go through and we buy supplies and we buy supplies and we buy supplies. At the end of our fiscal period, we don't have all of those supplies because we truly have used some of those items. So when we buy supplies, we record it as a debit to an asset and a credit to our cash. At the end of the fiscal period, we have to go through and do inventory. When we count inventory, we take a look at what supplies do we have. And we have used up some of them. So that physical count of our supplies is going to tell us actually what we have on hand. And when I read our directions here for on April 30th, the current year, it says Fix It Now has completed the trial balance of the worksheet. We're going to analyze our adjustment information into debit and credit parts and record it on our worksheet. Here is our adjustment information. Notice right here it says supplies on hand. That says what we physically have. Our adjustment column has to account for what we have used up. So many students will get this wrong on the test because they're going to see this adjustment and they're going to go through and say, oh, I'm going to adjust supplies on hand for $75. But that's not right. Look right here. Financially, we have $228 worth of supplies. When we do the account, we go through and do our inventory account, we have 75. So my adjustment column is what I've used up. So I have to take 228 minus 75. And we have used up $153 worth of supplies. So for my adjustment account right here, I need to make supplies go down $153. So I'm going to credit supplies $153. But we know in our happy accounting land, we can't have a credit without a matching debit. That is where we are going to use this wonderful account called supplies expense. So I'm going to debit supplies expense $153. So I have a debit and a credit. The only time that we use this account supplies expense is for our adjustments at the end of our fiscal period. Now, when we take a look at the value of prepaid insurance, okay, financially, in our books, we have paid $375. So I have $375. We call the insurance company and they say, okay, you currently have $250 worth of insurance that you have not used up. So I have to take $375 and I'm going to subtract $250. So we have used $125 worth of insurance. So we are going to go ahead and my insurance is going to go down $125. So I'm going to credit prepaid insurance because a debit minus a credit makes it go down. And therefore I need to have a matching debit. So I'm going to debit insurance expense $125. So we are affecting these 2 accounts, supplies and prepaid insurance, but we have to calculate the amount of the adjustment. Now the next step that I have to do is I'm going to take out my handy dandy little calculator and I'm going to add up my debit column for my adjustments. I'm going to take 125 plus 153 and that gives me 278 and I'm going to go ahead and plug that in here. I'm going to go ahead and repeat that for my credit column. Not a lot of numbers here in my adjustment column, but I still need to make sure that I am adding correctly. 153 plus 125, and that will give me 278. 278. And then I see right here I have a debit for 278 and I have a credit for 278. My adjustment columns therefore equal. When you do your worksheet, you must move from left to right. If your trial balance columns, debits and credits, do not equal, you cannot do anything until that comes out. So pause right there and make sure you get them to equal. Ask for help. Go through and see if Mrs. Gressel can help you. Then you can do your adjustments, and you need to make sure your adjustments, debits and credits, equal before we move on and we learn in class next about our income statement and our balance sheet. So I'm going to go ahead and click on Save and Continue. and then you can go ahead and work on, once this loads, the on your own portion. If you have any questions, please shoot me an email and let me know if you need any help. Thanks.